All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be going over some of the most aggressive Yieldmax ETFs. Yes, you've heard me right, and I want to dedicate this video off to Yang U9Q. Yang said, what about aggressive dividend ETFs to hold now? And I can't really see my replies. I've been replying to a lot of your comments lately, and I appreciate everything that you guys say. I'm going to give some of these a like here. I want to say thank you to everyone who's commenting down below. And Yang, we're going to be making a video about aggressive dividend ETFs to hold now. And what I've done for this video is I've gone through all the Yieldmax ETFs, and I've basically looked at, okay, what are the highest yielding Yieldmax ETFs? We start with Cony with 154% dividend yield. We have MSTY, and the list goes on. I was going to do a top 5, but instead I have all the Yieldmax ETFs, which I believe are very high yielding. It's about 7 or 8 of them. So what we're going to do in this video is I'm going to take my calculator using $1,000 investment to begin. We're going to start with Ybit with a 56% dividend, and we're going to see exactly how much weekly cash flow we get from each of these aggressive dividend ETFs. So if you guys do enjoy this video, we're currently up to 6,167 subscribers. Just got another subscriber in the past minute, which is awesome. And as a crazy note, our last video reached 1 out of 10. We don't like 10 out of 10s, we like 1 out of 10. So thank you very much to everyone who watched that last video. 324 subscribers in the past 28 days, and you guys know what to do. Okay, cool. So our investment account, let's just kind of do a little overview right now. We're down about 0.41% on the day. Ymax is just having a little bit of a down day here. It went down about maybe 0.5%, nothing too crazy, but we are still sitting at a higher than our average cost price. So we are definitely still up for Ymax. We have DLR.to, which has not journaled over to DLR.u.to yet. So we are still waiting for that. Nonetheless, our cash is building slowly, and we are going to be looking to make some moves as the market trends down potentially. But for today's video, we're talking about the aggressive yielding dividend ETFs from Ymax. And we're going to start with Ybit. Ybit is the Bitcoin option income strategy ETF. It boasts a dividend yield of 56% and current share price $15.56. And at the end of this video, I want to give my opinion on these aggressive yielding ETFs, because do I think they're the best option? I guess we'll find out. Ybit currently sitting at $15.56. You can see in the past month, it actually has gone from a $12 stock, or sorry, ETF, all the way up to a $15.50 ETF. This is, of course, with the rise in Bitcoin, and Bitcoin has been on a crazy bull run for the last little while. Will it continue? I don't know. But the reason why I have this one first is because I believe Ybit is going to pay a huge dividend based on this recent month's history. Now, starting with a $1,000 investment, we're going to divide by the share price, which is $15.59. That gives us 64 shares as a $1,000 investment. Now, what we're going to do is we're going to see the last dividend that Ybit paid out, which was $67.17. So we're going to multiply by that, 60.67. We got to do the 0.6717. Boom. So this is our monthly income from Ybit. We're sitting at roughly about $43. Okay. Now we go to the next Yieldmax ETF for aggressive dividends. We have a huge dividend increase here, up to 91%, almost 92%. This is AMDY. And when looking at AMDY's share price over the last 6 months, you can see down 34%. Sure, it's paid out some high dividend yields at 91%. We could see here it's fairly consistent about that mark, or even paying dividends higher than that at some point. The dividends look to outweigh the share price loss because it's only sitting at about, it's only sitting at about $11.50 or so, and it looks to me that they've paid out more than $10 in terms of dividends over their history. But nonetheless, they're definitely paying out a lot of their share price as dividends. But we'll make this little adjustment here, and let's see exactly what we get from a $1,000 investment. So we go $1,000 divided by the current share price, which is $11.46. We'll do that, 11.46. Boom, we end up with 87 shares. 87 shares multiplied by the last dividend, which was 81 cents and 40 micro cents, I guess you could say. I don't even know what to say for that. 81.4, boom, we're looking at $71. So you can see here from a 50% dividend to a 90% dividend, we have a boost of almost $30 in terms of monthly income just off a $1,000 investment. Going to the next investment here, we have AIYY with an 88% dividend. And you know what? We're not going to do the calculation for this one because it's going to be slightly less than AMDY. That's my mistake. I should have kind of put them back to back there. But you can see AIYY has actually done very poorly over the last 6 months. And that's kind of a trend that you're seeing with a lot of these high yielding, very aggressive Yieldmax ETFs, is their stock price history over the past 6 months has not been the best. And that kind of shows why they have these super high dividend yields. It's because a lot of the capital appreciation has gone into the dividend, and it's really capital depreciation. So now I want to talk about the next one, which is MRNY, which is another one that we see here over the past 6 months. MRNY, the underlying stock MRNA, has been absolutely hammered. And so it's only natural that the Yieldmax ETF, the Yieldmax version, has gotten hammered too. It boasts a 104% dividend, but once again, a lot of that dividend coming out of the share price. You have an ETF which has been trending down consistently due to the underlying stock and paying out high dividends, so it is going down very fast. One thing to keep in mind, we made a video about MRNA the other day. Is it a fantastic company? Not necessarily super amazing right now, but if you're a long-term believer in the stock, then maybe you look at it differently. But nonetheless, let's calculate this dividend. So we have $1,000 here. We're going to divide by the share price, which is $5.07. This is going to give us a lot of shares right here, $5.07. Boom. So we're looking at almost 200 shares, okay? So it's pretty insane. If you're able to scoop up a bunch of shares and then have a really fantastic bull run with the underlying, then you could be looking at some amazing dividend income. That's where the opportunity presents itself, but it totally depends in MRNA, the underlying stock. Now we're looking at 40 cents, 40.12. So let's just go right here. We have 0.4012. Boom. So you're looking at about $79 in terms of monthly income. As the dividend percent increases, so will the monthly income. Only natural. Cool. Now we're going to an ETF that I actually own, which is ULTY. And ULTY has actually performed pretty well for me. I've been paid out 2 dividends from ULTY, and I'm only down about $131. The dividends that I got paid out were roughly about $164, and the other one came in at about $135. So I'm definitely up on this position. It'd be great if we seen some more capital appreciation from this position, but ULTY is not an ETF that I'm going to be buying more of. I like to buy ETFs where I see appreciation and I see the performance of it doing well. And because I have not, I've yet to buy more, and I probably will not be buying more of ULTY. But for ULTY, we look at the share price. Once again, in the past 6 months, down 33%. This is a trend that you're going to see with all these aggressive yielding ETFs. And when we're looking at total return, is the total return of these aggressive yielding ETFs better or worse? For the most part, it's worse. But when we get into ones like Cony and Msty, which were coming up, you'll see that they're actually fantastic and they pay huge dividends. So we'll get into that. So nonetheless, we have $1,000. We are going to divide that by the share price, which is $9.85. $9.85. Boom. That gives us 101 shares. Let's see what the dividend was for ULTY. We have 83.13. Okay. So we got we're going to multiply this by 0.8313. Cool. So we're up to $84 per month. And that's definitely in line. I have about, when it comes to American dollars, let's see here, I have about 1,600 USD in, and I receive roughly about $130 every single month from ULTY. Is it totally bad? No, it's cool monthly income. I do reinvest, not into ULTY, but into probably Ymax, but definitely does really boost your monthly income when you're looking at these high yield ETFs. And the next one that we're going to be looking at is Fiat, which is actually the short for Coinbase. Now, Coinbase has had a huge bull run in the past little while. Cony has definitely benefited from this. Fiat has not, because Fiat obviously has gone down in the past 6 months, down 57%. But if Coinbase goes on the reverse where it actually goes down, then Fiat is going to benefit from this. And you're looking at Fiat with 112% yield, and you're looking at Cony with 154% yield. You hold both these at the same time. Hopefully your capital appreciation stays roughly the same and you're receiving these huge dividends. Is that true? I probably have to make a video on that to solidify that, but it's an idea. So nonetheless, we have $1,000 going to be invested. We're going to divide by the share price of Fiat at $8.47, 8.47. Boom. We have 118 shares. We're going to multiply that by the last dividend. Let's see what that was. That came out to 72.58. Okay, cool. Times 0.7258. Okay, your monthly income is looking at $85. So you can see here, just with a $1,000 investment, you're able to receive about $85 in terms of monthly income from these investments. Of course, they are trading a lot of capital appreciation for this. So if you're interested in income, this is your play. Maybe you use this to reinvest. But you have to be smart when you're entering these investments, but you want to be very careful. Okay, MSTY, our next Yieldmax ETF. This is one where it starts to get interesting, okay? Because MSTY, like all the other ones that we've seen so far with Ulty, MRNA, you see the share price absolutely falling over time. MSTY, not the case. You see here, it's actually more than doubled as a Yieldmax ETF. That's because the underlying stock, MSTR, has done so well over the past little while. I think it's trended up over 300%. Ymax, I don't know if it's kept up with that. Ymax. MSTY, I don't know if it's kept up with that, but it's also been paying out huge dividends at the same time. And you can see up 38% in the past 6 months. So you're receiving 128% in terms of dividends. The dividend yield has been fairly consistent over the past little while. Of course, the last one was the biggest dividend at $4.19. But with a $1,000 investment, let's see exactly how much you'd be making with MSTY. So you have a $45.70 stock or ETF divided by 45.7. Boom, you only get 21 shares. But with this 21 shares, you are seeing a dividend of $4.19. This is going off the last dividend, $4.19. Boom, you're looking at $91 from MSTY, a $1,000 investment. And then going to our last aggressive Yieldmax ETF, we're looking at Cony, which has, in the past, Cony has done very well. It's been up above $20 for a majority of its lifespan. You can see here up to $29, back down to $19, then up to $30 once again, trending all the way back down to where it sits right now at $16.91. Underlying stock coin is sitting near an all-time high, so you got to think. Cony is sitting at about $17, $3 under its initial IPO price, and coin is sitting at close to an all-time high. Likely, Cony, if it is to fall, it's going to fall and potentially get into stock split territory. If coin falls 50%, Cony will fall 50%. That leaves you to roughly about a $9, $8 ETF, which then gets into stock split territory, as we talked with MRNA. It's not to scare you, but it's to kind of keep things in perspective, have a plan in mind for if things go to the downside. Of course, you don't necessarily need a plan when things go to the upside, because you can always sell and take out your money, but when things go to the downside, you need a plan. Now we're talking about Cony. Let's talk about a $1,000 investment right here. So we'll take $1,000. We're going to divide it by the current share price, which is $16.91. So we'll do that now. $16.91. This is the highest yielding Yieldmax ETF. And we are going to multiply that by the last dividend, which was $2.02. So we have 59 shares times $2.02. Boom. We have hit $120 in terms of monthly income. With a 154% dividend yield, we are receiving roughly $120 a month on our $1,000 investment. If we were to multiply this by 12, you see a 154% dividend yield is roughly earning you about $1,400 every single year. So that is pretty fantastic to see. Of course, all these Yieldmax ETFs, these aggressive Yieldmax ETFs, they're all subject to change because these dividend yields reflect last month's performance. When it comes to Yieldmax ETFs, I believe, for example, Ybit is going to have a much greater dividend just because of the rise in Bitcoin's price, we're likely to see the highest dividend, in my opinion, just because of our huge run up here in the past month. We haven't seen anything like this in Ybit before and in Bitcoin, so that's going to be exciting to see. But nonetheless, these were the highest yielding Yieldmax ETFs, the most aggressive. And from this, my understanding is I wouldn't necessarily look for just dividend yield when you're investing into Yieldmax ETFs. The reason being, you see a lot of these stock price charts have huge downsides. The ETFs have not kept up in terms of capital appreciation. They're likely having these super high dividend yields and are paying out all that they really get. And the only one where this isn't true is MSTY and potentially Cony as well, but even Cony is subject to this at the same time. It's as long as the underlying stock, whether it be MSTR or whatever it is able to appreciate at a higher rate than the dividend yield, then you'll see appreciation in the Yieldmax ETF. If not, if they can't keep up 120%, then you will see MSTY fall. So that is something to keep in mind. And a great example of this, the last one I brought up was TSLY, because I was a holder of TSLY. I sold out my position. You can see in the past 5 years, down 62%. And that's because Yieldmax TSLY follows Tesla, which is a heavily traded stock. And when you have a stock that's big on the downside, like Tesla is, it obviously doesn't work well for TSLY. And I think I was pretty break even with TSLY, but you could see down 62%. It was one of the highest yielding Yieldmax ETFs back in the day, and it basically was a return of capital for me as Tesla even rose in price. So that's something to keep in mind. So I hope you guys did enjoy this video, a bit of a longer video. We're up to 6,167 subscribers. Thank you to everyone who subscribed, who commented to make this video possible. I want to give a shout out once again to Yu9Q. That is a difficult name to pronounce, but nonetheless, give me ideas. So thank you very much. I hope to see you guys in the future with more amazing dividend videos, and I hope you guys did enjoy. Please do take care, and until next time.